Have you ever pondered on what safe haven assets are and why they hold the title of being safe? Well, allow me to unravel this mystery for you. Safe haven assets are those unique investments that maintain or even increase in value during times of economic uncertainty. They are the superheroes of the investment world, coming to the rescue during market volatility or geopolitical instability. Their superpower? They typically have a low correlation with the broader market and are perceived as relatively stable stores of value. Let's dive into some common safe haven assets. First up, we have gold. This precious metal has been a traditional safe haven for centuries. Its inherent value, scarcity, and perceived stability make it a reliable asset during turbulent times. Next, we have U.S. Treasury Securities. These are bonds issued by the U.S. government. They're like the investment version of a fortress, considered one of the safest investments because they're backed by the full faith and credit of the U.S. government. Then, there's cash and cash equivalents. Holding cash in stable currencies like the US dollar or Swiss franc can be seen as a safe haven, especially when the market is in turmoil. High-quality bonds issued by stable governments or highly rated corporations are another type of safe haven asset. They're essentially IOUs from reliable entities, providing a sense of security during volatile times. Lastly, we have defensive stocks. These are stocks of companies that provide essential goods and services. Think utilities or consumer staples. These companies tend to be less affected by economic downturns, and their stocks are sometimes seen as safe havens. Now, you might be wondering, how does one invest in these safe haven assets? To purchase physical gold, you can buy gold bars or coins from reputable dealers. Alternatively, invest in gold exchange-traded funds that track the price of gold. For U.S. Treasury securities, you can purchase Treasury bonds, bills, or notes directly from the U.S. Treasury or through a brokerage. To hold cash as a safe haven, simply keep a portion of your portfolio in cash or cash equivalents in stable currencies. To invest in high-quality bonds, you can buy government bonds or highly rated corporate bonds through a brokerage account or bond mutual funds. Lastly, to invest in defensive stocks, research and invest in stocks of companies with stable earnings, strong balance sheets, and reliable dividends, preferably in defensive sectors like utilities, healthcare, or consumer staples. In summary, safe haven assets are investments that retain or increase in value during times of economic uncertainty. They offer stability, low correlation with the broader market, and can provide a safety net during volatile times. Whether it's gold, treasury securities, cash, high-quality bonds, or defensive stocks, each safe haven asset has its own unique benefits. And remember, a well-diversified portfolio often includes a mix of these safe havens. So, take your pick and invest wisely.